Welcome out to another Trading Justice podcast. Excited to be with my brother, Matt. I always enjoy these hours, Matt, where we get to talk about trading. You know, you and I interact a million times during the course of any given week. This is kind of our, own personal recap, re-journey. What's important? Go ahead. What message do we want to help with people? I really enjoy these hours. And I'm going to enjoy grilling you with a few interview questions here about the upcoming webinar you got. So how you doing, Matt?
Doing fantastic. Excited to be here, and I do agree with you for our hour therapy session. Yes, I do.
I did not use the word therapy.
I do.
Well. But Matt, we have a big webinar coming up. This is, and I'm going to ask you. I want to talk to you about the importance of education here in a second. But just tell us, big picture, what this webinar is about, why they should have come. Because they should.
Well, they should come because Tackle Trading puts on the best education out there in the world. That's why you should come. If you're interested in learning how to trade, there's no better place than Tackle Trading. I can promise you that. There's a reason we are a 5-star rated educational company on Trustpilot. One of the top rated educational companies out there is because we truly do care about the educational side of the equation. I've said for a very, very long time, the key to success is education plus application, and we put the education in that equation. So you want to come because we will teach you how to be a precision trader, how to be that market assassin, how to understand trends, patterns, support, resistance, when to buy, when to sell. And we're going to have a lot of fun. That's the thing about Tackle Trading webinars are we're always trying to achieve two things. Number one, we're always trying to educate the masses. We're always trying to educate our community. And number two, we're always trying to have some fun along the way. Life can be difficult. Let's have some fun. And so we're going to have a lot of fun on Monday. We're also kickstarting our holiday sell season at Tackle Trading. So you can definitely head over to the Tackle Trading store at tackletrading.com. And this is a great time to look at all your educational needs, whether it's coaching or whether or not you just want to become a pro member of Tackle Trading. I can promise you there's no better time from a cost perspective than right this very second to be a part of Tackle Trading. So great time. By the way, December is the education month at Tackle Trading. We got a lot of webinars coming up, both on YouTube. I know you're going to be teaching a webinar on YouTube. Coach Gino's going to be teaching a webinar on YouTube. I know Coach Greg's going to be teaching credit spreads on YouTube over the next month as well. So get excited for some of that as well. We'll have more information down the road.
Yeah, absolutely, Matt. And education is really, really important to what we do. It's why we do what we do. We could be traders independently doing anything. We could just be traders. But you and I believe in and I think mission is an inappropriate word. A mission to help people acquire knowledge. And I've heard you use some version of the following saying, I don't know, 1,000 times, and I'm not being hyperbolic either, that, application and education combined are the key to success, and I just want you to talk about this principle because I mean, 1,000 times, I really do think I've heard you say it. So it's something that's important to you, talk about this for a minute.
Because I've seen a lot of people in my career as an educator and as a trader that get very interested in wanting to learn how to trade. They know the importance of learning how to get their money working for itself instead of, sitting in some savings account or checking account or even in some degree of, retirement account, just sitting there being stagnant, not working for them. And so, we all know the retirement stats in America. It's very difficult to retire at this point, given the fact that inflation's out of control, and quite frankly, they don't make they make enough money over the career as a investor in the market to retire, but fees eat into that, inflation eats into that, the devaluation of the dollar eats into that, and it becomes a very, very difficult situation. And so many times I've met people along the way that wanted to learn how to trade, wanted to learn how to invest. And so they took their time, they invested in their time, but they never did the application side of that. They put their butt in the seat, but then they didn't apply it. And then I met a lot of people along the way that was like, nope, I'm going to go learn how to do this on my own, or nope, I got this, or I'm good enough, or, whatever the case might be. And they try to skip the educational side of the equation, and they try to go out there and apply these concepts of trading because they watched a YouTube channel, they watched a couple videos on Tackle's YouTube channel, they listened to a few podcasts, they understand the language of something, but they don't understand who they're going up against. They're going up against Goldman Sachs algorithms. They're going up against, 90% of the market that is algorithm driven, that doesn't care what they think they know. And so I've met so many people that either want to either just focus on the educational side of it or the application side of it, but it really takes both. It really takes both. And that's what I try to really kind of do at Tackle Trading, is a mix of both the educational side of the equation plus the application side of it, because it takes both. And oftentimes it takes somebody holding your hand, pushing you along the way to achieve what you are setting yourself out to do. And so I've said it a billion times because it's true. It is not just one or the other. You cannot just go take education in any form of education, whether it's, going to law school or becoming a doctor or going to, dentistry or whatever the case might be. You can't just go to school and then expect to be that. You have to apply the knowledge given. And at the same time, you wouldn't exactly go to a doctor that didn't go to school, right? But I meet so many people that come to the financial world, the oldest business in the history of mankind, actually the second oldest business in the history of mankind, but the second oldest business, and they're like, oh, I'm just going to come here armed with 5 minutes of education and I'm going to apply it. Or two, I'm going to, get 14 years of education and never apply it. And I'm like, there's got to be a happy medium there, guys. Let's learn how to do that. Let's both do the education and the application side. And so it's a saying that maybe people don't understand the true nature of the saying, but I truly do believe it takes both to achieve success in anything. Not just trading, not just investing, in any aspect of your life that you want to become successful on. You have to learn how to do it, and then you have to apply it.
Yeah, no, I mean, it's so true. It's just, you can't just read an article and then be a good trader. But we also, ever since the pandemic, there just seems to be a culture of, well, I'm just going to go apply without understanding why they're succeeding or why they're failing.
The TikTokification of the trading world. Yeah.
And that's a real thing. It's a real thing. And it's one thing that separates how you approach what you've done at Tackle Trading, how we approach here on the podcast, is we want to teach people why things work and why they don't. I saw you in the Traders Lounge a couple times this week say, all right, this is what you're doing, and this is why it will not work long term, right? You might find a short-term success, but over time, it's going to eat you up,
Well,
and go ahead.
I know that I know what you're talking about, because it was a couple of days ago in the Traders Lounge, and it was with one of our students, and they asked me a question regarding an option trade. And I basically, took about 10 minutes to really kind of detail my thoughts, because I felt it was a very, very important question. But I just want to say that moment that everybody had in that lounge that you're talking about never occurs if it isn't for the student applying what she's going through. And that's the application side of it, right? She's going through education. She's sat her butt in the seat. She's went through the step system. She's went through Tackle 25. She understands the concepts, but now she's going through the application side of it. And there's all these bells and whistles in the market going off every single day, and prices going up and down. And some of your trades are making some money and some are losing. And it's hard to understand. And that's where the application side, you can really get into the dirty detail as an educator, saying, okay, you did this right, you did this right, you did this wrong, you did this wrong. What if we talked about doing it a little bit of a different way? And so it's the mixture of that application, bringing in the education, informing our entire community of, this was the mistake that was made. This is how you correct it. Now we all move forward with a better structure and a better foundation. And that's just what you get at Tackle Trading. Those are normal conversations that happen every day in the trade.
Yeah, they are. They're very, very, very normal, Matt. Okay, I got a question for you. Right. So we all, as traders, it's funny. We've been doing this so long. we have to update because I've heard you, I heard me, I hear Greg say, yeah, I've been trading 15, and then all of a sudden you catch yourself 20 years.
Yeah, time goes.
Like you're like, I've been saying
Time
15,
goes.
but now right. And we make mistakes along the way in our journey. We learn from these. Like this webinar, like what are some maybe common mistakes that a trader might avoid just by attending this webinar coming up on Monday?
Oh, the number one thing I think people will learn how to do is to not chase price. I just find a lot of new traders make the mistake of chasing price after all the pros, after all the algorithms, after everybody else has made their decisions, right? And then retail comes in sometimes because now it's on Twitter, it's on TikTok, it's on Facebook, it's getting out there in the social conscious. It's like, ooh, did you see this trade? And it's already up 30%, right? It's already had its momentum. And now you're just going through late stage momentum. And they're like, oh my goodness, let's pick up pennies in front of the freight train when Wall Street's making billions and billions and raking in everything. And it's just like, now we gotta switch we gotta flip the switch a little bit on that one. And so you got to learn how to kind of understand the momentum conditions and what follows next. And so I think the number one mistake people will make when they start learning these concepts is they want to go out there and apply it on everything. But you got to learn the patience according to that, Mark. And when you think about the precision trader, there's really kind of three key characteristics of a precision trader. Number one, price action is everything. It is king, queen, country. Price action is everything. And it's not that other forms of analysis are not important.
Yeah, in fact, we're gonna talk about that.
I'm a
later in the
precision
podcast.
trader
Yes.
teaching the precision trading webinar, and I'm a top-down analysis as well. I put a lot of emphasis on central banks and geopolitical situations. It's not that those things are not important. It's just that we're not making decisions based on those things. That's information we're taking in to understand the entirety of the environment to help us maximize our edge. But at the end of the day, decisions are made based on the technical condition. Decisions are made based on support and resistance and the trend and the pattern within the trend. And so as a precision trader, it's really about learning how to put the blinders on and really focusing on what the price action is dictating. Because once again, that first key component is price action is king, queen, and country. We make decisions to enter, stop loss, and target based on the chart, based on the momentum, based on the entirety of the technical condition. And then when you look at the second key factor there, it's really about understanding that we're also trend traders. We're not trying to create trends out there. We're not trying to create momentum out there. We're trying to identify the prevailing trend, and we want to trade within that condition of the prevailing trend. And then number three, within that trend trader is that key component of we are not momentum traders. As the momentum takes hold and it goes up, 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 you got to understand when those areas get overextended and what to expect next. And so we're patient. We allow patterns to determine our actions within that prevailing trend. And so it's a very technical story told over time. And then in the webinar on Monday, obviously, I'll be teaching people how to utilize options at those key moments of decision making on the chart itself.
And that's the extra layer here, right? There is the analysis of the chart, then there is the instrument. That's another area, Matt, where I think a lot of traders, new traders, they skip the cart before the horse type thing. They go straight to the options, right? Like
the options, the strategy. You got to learn all these things. Like,
and the options just a strategy,
it's
right?
just the strategy. Yeah, the options are the strategy, and you're using options because you want to leverage your money. You want to take your money and make it go further. You want to, maximize your exposure there. And so options allow you to lower costs, leverage your money, and do a lot more with a lot less. But that's the strategy component of it. What I'm going to teach on Monday night can be applied on any time frame for any type of trader. The strategy is up to the individual trader themselves, but obviously a lot of our community does prefer the options route, but futures, forex, it all works.
Yeah, well, I could ask you a million other questions, but we have other things to cover in the podcast. And if you want to know more, Sign up for the link below. That precision trading webinar. We're releasing this podcast over the weekend. It will be on Monday. Be sure to sign up. And we get to apply some of that, precision trading analysis, Matt. And we try to do that every week in the podcast. And last week in the podcast, Matt, we talked about brace for the breakout, right? And we laid out a case why a breakout was on the way. A combination of some Trump vibes, right, that have happened since the election, heading into a very seasonally favorable, and these are kind of those external things, right? It's not the only level of analysis, but there are things that you can make a case on why things, are setting up for a breakout. And then, right, we laid out the technical case of why one should expect potentially a breakout. And then we talked about in the podcast last week, to recap, because this was a pretty good podcast call, that we thought cyclicals would lead, right? I mean, we said this last week, like, expect cyclicals to lead this week, expect technology not to participate, and then you'll hit some point in December where there's likely some catch up in technology. And so far, Matt, this has been spot on how it has played off.
Not to mention, we said defensive was going to pick up last week, and defensive certainly did pick up last week. So, ever since the election.
So if you listen to the podcast, you understood really exactly what to do this week, and it's played out very well.
And the thing about the podcast is a highlighted version of what we do in the Tackle Trading newsletter. And so if you want to get the nitty-gritty detail of everything we talk about in the podcast, definitely go and make sure that you're taking advantage of the Tackle Trade newsletter that we put out every single week as well. Mark, when you're looking at the market in general, I think three things is really kind of propelling this bullish uptrend to a certain extent. Number one, you had the clean victory from Trump in the election. And that wiped away one of the biggest concerns the market had going into the election was instead of talking about everything we've been talking about over the last 2.5 weeks, we talk about, court cases and who's going to actually get this, who's going to get that. It was a clean victory, and that was very important for the marketplace. And so, and then with Trump getting the winning the election and taking over president and whatnot, the market itself has really embraced a pro-growth philosophy as of right now. Little concern on the tariff side of the equation that the market is discounting, quite frankly, because I think the market sees what Trump is doing with the tariffs as of right now as a lot of negotiation tactics. Maybe not, but that's kind of what the market is seeing it as right now, is that Trump's being a little bit outlandish with the 60% on all Chinese tariffs, 25% on all Mexican and Canadian tariffs. But then it just so happened to be the following day, Mexico's president and Trump had a meeting. And then literally just yesterday, Trump and Justin Trudeau, the Prime Minister of Canada, the Prime Minister of Canada went down to Mar-a-Lago and just hung out with Trump down there the day after Thanksgiving. And so is Trump really looking to be aggressive on the tariff side of the equation, or is he looking to do the negotiation tactic? I think it's an open question, but where the market's at right now is embracing the pro-growth strategies that from a deregulation perspective, opening up the floodgates to a certain extent from that perspective. And then obviously they're discounting the tariff conversation, which would cap out market performance. And so that's number one. Number two, you're starting to see some positivity coming out of the geopolitical side of the equation.
Yeah.
And think about it from this perspective. The supply chain has been a slight concern around the world over the last 4 years. And for the better part of the first 2 years following the pandemic, that supply chain was very, very difficult. And ever since then, we've had massive wars in Europe and we've had massive wars in the Middle East. We're starting to see those get alleviated a little bit. There's anticipation on the Ukrainian and Russian conflict. We don't have to debate that one right now. That will take care of itself. But you obviously over the last few days had some positivity coming out of the Middle Eastern crisis as well. And so you really see it as an alleviation to a certain extent. And then number three, the technical condition has been so consistent ever
I want you to hold off on that really quick, because I want to these vibes, and so when we talk about these external catalysts, these themes, these narratives, whatever you want to call about it, you already had a pretty good set coming into the week. That's being added to, not detracted. Let alone give me the dollar real quick, Matt. Because when we talked last week it was a really bullish podcast. like, and I even said
We
we're
literally
not.
said brace for the breakout.
Like it was a really bullish podcast, and we gave the Bears about 3-4 minutes and said, like, if things were to disrupt this, and we talked about the yields in the dollar.
Yeah.
If something was going to disrupt this December, end of November, little fun time for bulls, that's likely to be. And well, the dollar exited the party, said, I'm not going to be that guy at the party that causes everyone to not have a good time. Right. And you got to, part of precision trading, Matt, is recognizing a chart pattern that's getting blown up, isn't it?
Well, you call it blowing up, and I call it shifting volatility, right?
Yes.
And the dollar, one of the reasons we're talking about the breakout in the market is because the dollar did in fact fake out. And it was on pins and needles, though. But when you're looking at the dollar and you're kind of breaking down the dollar's importance right now, obviously it's going to be important to the commodity space and the equity space. But shifting volatility at the top end of a trend is really important because you now see it as first and foremost, you don't have a consistent trend any longer. Number two, you've given up the momentum of the trend. Number three, you had a failed breakout, which is now a fake out. And number four, you got shifting volatility. All of those are precursors in reversal analysis. And so it's really good to see, number one, because the dollar was getting a little bit concerning. And when I mean a little bit, I mean a very, very
a lot. Let's call it what it is.
Yeah,
a lot.
Because when you're looking at the dollar and you're kind of breaking down the dollar, you're also breaking down the yield conversation as well.
Yep.
And so it's really kind of both of that, the dollar putting pressure, yields putting pressure. And we know the market can't sustain a bullish uptrend as long as yields are going up. But can you see momentum pops up? Yeah, but it's really hard to find the consistency if you're also going to fight the yield side of the equation, or i.e. the dollar. And so it was good to see the shifting volatility here on the dollar. And it just so happened that it started to occur right when we started seeing kind of that chatter out of the Middle East that it looked like, Hezbollah, Lebanon, by way of Iran, obviously Hezbollah being an Iran proxy, was going to sign a ceasefire agreement that was expected to become a permanent ceasefire agreement with Israel. And why that's important is because Hezbollah, has that war in Lebanon only been going on for a couple months? Yeah, but Hezbollah has been aggressive ever since October 7th of 2023 when the terrorist attacks from Hamas went in there. But it wasn't just that, Mark. Hezbollah, as well as Iran, are also segmenting away from Hamas as well. And that's not been the case for a long time. Hamas has been reliant on Hezbollah to keep Israel, active in the north. And obviously Iran, Hezbollah and Hamas are both Iran proxies. And so now Hamas is just kind of a standalone situation. And the philosophy right now working around the market circles is basically that situation that has been going on in Israel ever since October 7th of last year, it looks like that could be coming to a conclusion as well, now that Hamas is really kind of by themselves. And obviously they've been absolutely annihilated over the last year by the Israeli military. And so when you're looking at that situation, that alleviation event, why is the dollar coming down in that scenario? Safe havens will come down when the geopolitical events get alleviated. And the dollar, being the reserve currency of the world, is one of those safe haven currencies. And so two things are happening here on the dollar, and I think it's positive for the market on both sides of the equation. Number one is you have some alleviation on the geopolitical side of the equation. That will alleviate some of the pressure that gets put on the dollar in those environments. And number two, Mark, the dollar was responding a little bit to the anticipation of tariffs. And we are now starting to see that maybe some of that, not all of it, but some of that tariff, especially on the aggressive side of the equation, could in fact be a negotiation tool, and we're not looking to apply those aggressive style of tariffs on Mexico, on Canada, especially if they work on some of the border issues. And so I think that's playing a little bit of a role here as well. What are your thoughts?
Yeah, no, I mean, just from a narrative, because, I label myself a thematic trader, right? Import on narratives. And when I look at like a market, like I'll look at individual narratives. Is this something really potentially bad?
Yeah.
Rising yields in the dollar are like at the top of my bugaboo list. World War III, like tariffs, like, economic. The thing that scares me the most.
I'm not sure World War III is bearish. But I agree with the rest of it.
No, but the things that scare me the most are rising yields.
I was kind of kidding on World War III bearish. Just
no, but I get your thing. But like because of the you can't ignore them because of the stifling impact they have on earnings, right? They increase the borrowing rate, they increase the profitability. They just do, and they just do. It directly impacts.
You would have seen aggressive earnings revisions going into the first quarter reporting season if the dollar would have continued its trend. Yes,
and so we have
and by the way, Mark, that's a guarantee that has to occur. It's a mathematical.
And that's why you can't ignore it.
No, it's a mathematical equation. It has to occur. It's not a hypothetical.
And so like when you look at a positive technical environment, which we're going to detail a little more here in a second, the narratives are firmly in the bulls camp. They have been added to. We're going to talk about the new Treasury Secretary here in a few minutes as well.
Another positive event for the market.
They have been added to recently, and so you have this, like last week, this Trumpy vibes positive thing. You have the seasonality. You've had economic data be resilient. Inflation hasn't been an issue. Maybe we'll do some podcasts in 2024 where it becomes one. We'll see how that plays out. But then you've only added this week to these positive.
Inflation might not be an issue until people realize 3% is the actual target, but we'll talk about that a little bit.
And so it's a strong case for the bulls as we head into this new week. There aren't any overt red flags. There's a lot of theoreticals.
Not a lot of red flags out there. Not a lot of dark skies right now.
Yeah, and so there's theoreticals, and what bears do the worst with in the entire universe? Theoretical. Something bad might happen one day.
Nobody listens to that because we hear it for Mark. How long have we been hearing from perma bears for the last? How many times in the last 15 years since the end of the subprime meltdown have you heard from bears about some end of the world analysis?
Yeah, no.
How many times have I blasted that?
Yeah. When yields in the dollar are skyrocketing and going up, that is not perma bear talk. That is a practical.
That's pricing in things.
That is you need to realize this has a real world impact. This is not theoretical. It's happening right now, right? But it's pretty good backdrop for the bulls from a narrative.
So do you think the yields have basically priced in kind of expectations where we're currently at right now?
I think you are going to need a legitimate inflation scare for.
Would you buy bonds right now?
No, I would not. But I wouldn't short them necessarily either, right? I'm kind of because we have had small upticks in inflation, right? The Fed has backed off. Maybe, right? And so it's kind of
there's some sticky inflation out there.
It's not an easy call. And that's why I say no. I'm like, I find easier.
There's going to be sticky inflation until you find a cure to the housing problem.
So I would not buy treasuries right now. But I wouldn't short them right now either. I find it
I take that as a positive development on the yield.
Yeah, no, it is. One day, because absolutely.
Like up until this week, it was just a momentum condition, right? Big momentum, V-shaped recovery from 100 all the way back up to 107. And so now we're seeing that shifting volatility, and just hearing you on the yield, because you are far more indoctrinated on the yield side than I am. And so when you talk about yields, I understand the yield side from the central bank perspective. That's my expertise when it comes to yields, is understanding central banks and what central banks are going to be doing from a path of policy perspective. You understand the actual bond side of it.
And we both understand the structural inflation arguments that
Yeah.
maybe there's some structural inflation. And if that manifests itself, right, we will pay attention, right? We're not going to ignore that. But it ain't for my trades this week, bro.
Yeah, listen, for me, this thing's a bullish conversation until the first of the year, unless obviously the price action dictates
The
something
CPI
else.
report next week, it's not this week, it's next week, would have to be so shocking.
Yeah, but the thing about inflation is it's the most laggard of all of the
I know
reports out there, and so
I'm just theoretically trying to figure out something. I'm not used to being this bullish as I've been lately.
I know it's weird. It's almost like I need to talk you down a little bit.
Well, but here's the thing, we talk about precision trading, and all we do on charts since the election is look at controlled environments. We have seen finance go up, control. We are right now, give me small caps, give me RSP, give me industrials, give me, cyclicals. I am seeing very controlled environments. Heck, even technology, which isn't participating, has a very controlled weekly pattern that has a very clean breakout level, right?
Well, like the cues themselves have already broken out, have already increased support. Technology itself is not.
Man, all we do is see, with the absence of a few areas, semiconductors, which in stocks in the news we'll talk about a little bit more in depth, is we see controlled environments. And then when I read the newsletter and I don't know how they do this, but how they get in up conditions to reduce the RSI, I don't know how they do it. But when I, in the newsletter as a consumer, because you asked me to read it to see if you've made any, grammatical, like a good copy editor, read through. But as a consumer, I read the indicator analysis. And when I look at the indicator analysis, I'm like, how in the hell is the RSI that low? But well, it is.
But it is. Well, oftentimes RSI will remove some of the longer duration upward movements in price that were very aggressive. And so, for example, RSI measures the last 14 days. Okay. And so it doesn't care about 15 days ago. So if you look at the market today, 5, 10, 15, kind of in that level, you're basically removing these 3 big upward movements in price this previous week, Mark. And so go back a week ago, for example. Going back a week ago, the RSI was measuring this upward movement in price right here, right? And so it was measuring the election momentum when the market went from 271 all the way up to 600. The market moved 5% in a very, very short time frame. Whereas this week in the market consolidated all week long. We went from 597 to 603. So you're removing a 30-point upward movement in calculation from the indicator where you just got consolidation. And I say this all the time in bullish uptrends. What you want to see is a little bit of a high base here. What you want to see is a little bit of a consolidation, because it doesn't take a lot to alleviate that overextended conversation, especially from an RSI perspective, if you understand how the relative strength indicator works. Because and again, what it does is it basically, now you look at the price going into next week versus the price last week when they aren't very different, right? Yeah, you're going into it this week at 602, whereas you were at 597 last week, but you're not going into that with a massive momentum condition. But you now see it, despite the fact the price really hasn't done much, you now see it as a much better, much cleaner environment, because you're now not overextended from a technical perspective. And so, yeah, it's those types of things that you will get all the time in the newsletter. Little tidbits on what the indicators are telling us, pattern development, specifically what those patterns are. And I usually write about that quite often. I also wrote about the MACD convergence, the MACD divergence on the weekly chart this week, talking about how I personally read that, and that was on the technology space, was pent up demand going into that potential breakout. And so I know tech hasn't been kind of the flavor of the month, but it certainly was the flavor of the day on Friday.
Yeah, no, and this is the one different. Okay, so from last week where we talked about the breakout, I believe that the narrative case is stronger than ever. The deeper we go into seasonality without anything bad happening, that only strengthens the controlled environment.
It feels like we're in the middle of seasonality.
Yeah, like the controlled environment as good. The only difference I even more bullish in the short term than I was last week. The only difference I have is I am more bullish on tech versus other areas of the market, and specifically the Qs, not necessarily XLK, but the NASDAQ 100. More bullish on the NASDAQ 100 than I was this time last week.
Yeah.
It feels like things like finance, as they get stretched, right, they naturally slow down. Right.
Well, everybody that's been making money on that cyclical move, as they lock in profit, they got to put it somewhere, and usually they don't take it.
And so it feels like we are close. But this is what we said. That event. It feels like we're closer now. I don't know if that tech move happens this week. I don't know if it happens next week. Who knows these things? But it could happen soon, right? It feels like we're closer to tech, the NASDAQ 100 participating. But my goodness, man, I got great setups and lots. I got a lot of dealer's choice. There's a lot, small caps, RSP, lots of individual stocks, sectors. The NASDAQ, it's a fantastic environment right now.
Yeah, and I do think the market is told, especially the specific areas of the market is told from a sector level perspective. And we talked about this in the newsletter quite a bit, but at the end of the day, initially it was kind of because the election was a reset, wasn't it? It was a technical reset for the entire market. Would you agree with that?
Absolutely.
Okay, so the election was a reset, and ever since the election, you've had technology kind of be the laggard of the bunch, right? So you've had real good price action in almost every area of the market. You initially had it be cyclical was kind of just the flavor of the day because, again, the deregulation argument was a very easy argument to understand for absolutely everybody around the world. And so that deregulation argument was really just cyclical. And you saw the diamonds just explode up. You saw IWM go up. You saw RSP outperform SPY. That's when you see a pure cyclical movement. You see those types of things. And then you started seeing a little bit of okay, now there's a little bit as we're slowing down, because obviously as you go higher in a trend or in a leg within a trend, you start to slow down and you start to develop secondary patterns. And while people are patiently waiting on those secondary patterns, what areas of the market started to lift off? Well, the areas of the market that started to lift off were the defensive areas of the market. Healthcare had one of the better weeks last week that it's had in a very, very long time. Big, deeper bearish retracement in healthcare. Utilities had a standout week last week. Real estate had a standout week last week. Consumer staples had a standout week last week. And now you got a little bit of an environment where I see defensives as slightly overextended. I see the cyclical areas as slightly overextended. Where are those areas that are not? Well, secondary patterns develop in cyclical and defensive. It's tech.
Sometimes it is that simple. What isn't overextended? What hasn't participated and isn't? I mean, sometimes it is not overly complicated, and I think this is one of those times.
Well, it doesn't mean that defensive is going to, I'm just talking about these cyclical and defensive being slightly
pause and take a turn.
So again, I think I still like the tech on the breakout.
Yeah.
And again, I just want to put it out there on the radar because as these trends get a little bit overextended, I have a little bit of philosophy that tech might get its turn.
All right, give me Forex Factory real quick as we, and then we'll lead into an homage to Janet Yellen and our new Treasury Secretary. Matt, I've made this comment in our tackle today and different places several times recently. I do not think the market cares much about any economic data right now. I think they're looking ahead to what comes next under the Trump administration. What is Trump going to bring? And, normally we have a big unemployment week coming up, like we have chock full of data, right? We had several red reports that I don't think the market cares about any of it right now, unless it gets dramatic or something.
Well, maybe that's one of the reasons why they haven't cared about it, because we haven't really had a dramatic conversation on the reports. The reports have been fairly in line. There wasn't a lot of concern in the reports, and there's been a couple of weeks we didn't have a lot of reports. So the economic landscape has not been important, but Mark, that's probably because just the election was chiefly important. Obviously, as we move a little bit further away from that, and the pricing in of certain areas of the market start to get done and whatnot, economic landscape will become a little bit more important. But right now, the market has certainly discounted it. But then again, it hasn't been bad to discount, so I don't even know if that's the accurate way to describe it.
Yeah, but I'm just like, even the nuances of like algorithmic movement on yields or whatever. Like, and I just am not seeing hardly any like movement. Well, now we'll see if like the unemployment report, this, a good test for the theory is if we get a big beat or a big miss on the unemployment report this Friday, right? We'll see. That's coming up as the highlight of a week. But unemployment data, pretty big number forecasted right after last month's small number. That's a big number increase, but it's not too
I would
out
hope
of
nobody
line.
had a job last month. So
It's pretty in line with about the range of where unemployment numbers have been over the last year or so, that 200K number. So we'll check that out, and obviously on all that. I mean, is this something you're even focused on this week? It's really taken a back seat for me.
It's something I always focus on, but yeah, I definitely agree that with it's taken a back seat. I mean, you do have some serious economic data coming in. ISM manufacturing PMI, JOLT report, jobs data, services PMI later on this week. And so, the market has discounted it, but maybe the market wakes up to the importance of the economic side of the equation. But again, I want to be clear. We haven't seen significant misses for the market to discount. Obviously, last month's labor market was a little bit different, but there was context around that 12K number, especially with the hurricanes and what happened in the South. So yeah, they've discounted it, but
Point made.
It takes a backseat. I don't know what else to say on it.
Well, Janet Yellen will not be out there manipulating data this week because she is heading off to the sunset. And if you are a bull, if you have made money in the last 4 years, I can guarantee you are not paying Janet Yellen.
Raise a glass to
raise a glass. Yes. Has she contributed to general wealth inequality? And
I'll raise my Starbucks filthy melon blast to Janet.
Yeah, I mean, has she contributed to wealth inequality and a potential social uprising in the next coming decades? Of course she has.
Of course.
But boy, she was good at her job and she knew how to pump.
Listen,
right?
I just don't think people understand the role Janet Yellen played in the stock market.
I like what you told me, like when we were talking earlier this morning. You're like, yeah, listen, the Democrats, they can blame each other. They can yell at Biden for not dropping out soon enough. They can, yell at Kamala for doing this. They can yell at one person. They cannot yell at.
They can't yell at Janet.
Janet Yellen did her job.
Biden has a lot of mud on him right now, political mud. He should have dropped out. Same thing. He should have dropped out in 23 and had the Dems actually do a primary. I've found it hilarious. Listen to Democrat on Democrat analysis over the course of the last couple of weeks. All trying to blame certain things, trying to understand the magic of what allowed Trump to win the election. But again, at the end of the day, Dems are in their figuring things out mode. One thing you do not need to figure out is what Janet Yellen did in the stock market this year, because she pumped and she pumped and she pumped and she pumped some more. And let's raise the glass to Queen Janet. She did a great job pumping that money this year, and we're all going to have to deal with the social unraveling of inflation over the next 5 to 10 years.
And so Janet's out. New gentleman.
I hope people got the sarcasm on that, by the way.
Of Scott Bessent. is going to be our new Treasury Secretary, almost certainly to get approved. This guy, this is um, a really solid pick.
I thought it was a better pick than Mnuchin.
Yeah, like
By the
this
way,
is
I'm not sure you can beat Janet.
you
She's
can't be Janet. That's not fair.
pretty good at what she does.
That is not fair.
It's not a fair comparison.
She is too good at the game. She was interwoven in all this. She's too good at the game. It's not fair. But Scott Bessent is a very traditional, safe pick that speaks to some of the market worries, right? In the sense that tariffs, deficit reduction. This is a pick that was celebrated.
If the market's concerned on two policies out of Trump, it's mass deportations and tariffs. Mass deportations meaning how aggressive, like the market could care less if Trump's going to the prison system and deporting anybody that has served a sentence from an immigrant perspective. The market would concern if we're talking about farmers and construction companies and service-based jobs and whatnot from a deportation perspective. And so the market concerned on Trump's policies, because the market loves the pro-growth policies, right? They absolutely adore the deregulation argument. The market is so sick of all these regulations. We have way too many on the books, and we need to clean up that nonsense. And so the deregulation argument is a really simple one. It's an easy one to understand, and I think it's one that most people do support. So the market is a little bit of concern on two fronts. Number one would be the how much mass deportation, because if you start to deport the workers in the service industries that produce a lot of the things we eat, a lot of things that happens below the surface, that's going to have an inflationary impact. It undoubtedly will. And then the second thing would be the tariff conversation. And this Bessent pick, Mark, is a conservative, traditional Reagan economist type of pick that has a very diverse worldview. I really liked the pick personally.
I did too. I know Elon Musk was like lobbying for someone else and other people were lobbying. This guy, like out of the choices, I was like, this is the pick the market wants, right?
Listen,
like
this guy, the other ones that you're talking about, I don't want to debate the political side of that, but the other ones you're talking about, they wanted it too damn much, Mark. They wanted it. They fought for it. They backstabbed over it. And Trump basically said, I am done with that. I am going to go. And he brought people in from Wall Street. Obviously, he wanted a Wall Street guy. He got one in Bessent. And Bessent has, like I said, has a diverse background, understands the landscape pretty well. And he probably will push back against some of the more aggressive economic inflationary based policies that are a little bit more concerning. And so I thought this was a wonderful pick. And I know, the market certainly celebrated it a little bit as well.
Yeah. I mean, and what for me will be like, there will be market turmoil. Guess what? This beautiful trend is not going to last 4 years of the Trump administration. That's not.
And neither did it the last 4 years in Trump's first administration.
And it's very interesting. The Treasury Secretary role, when crisis or market turmoil, how they respond really defines how good they are at their job. Both the market and economic crisis. That's where Janet was so good. Janet always knew what to do. She always knew what to do.
She always knew what to do because she always knew she could get old Jay Powell. Here's the thing that Janet, not only was Janet the central bank president, Janet was the Treasury Secretary. Janet was also the vice chair under Bernanke as well. Mm-hmm. She pulled Bernanke strings. She pulled Powell strings. She pulled everybody's strings. I got a lot of respect for Janet Yellen.
Yeah, and there were times Steve Mnuchin fell short in the first Trump. And I like the mooch.
I did.
I mostly just like saying the mooch.
I like saying the mooch. I like calling him the mooch, but I was not a fan of the Mnuchin.
He fell short in times where market or economic he was not up
He
to
had
the
to
job.
have Powell in 18 come in and play the big boy role, and you don't want Powell playing the big boy role. So
And so and so we'll see how Scott does in these, in the thing, and keep an open mind. But it seems like the Wall Street definitely, you can put this in the bulls narrative camp. This was one of those bullish, nice things to occur this week.
yeah, like I said,
week.
out of the candidates he was considering, and Bessent kind of came from nowhere at the end there. But like I'm a fan, and I'm also a fan of your write-up in the newsletter this week on Bessent. It really helped me understand even more about his, because I didn't know a lot about him, Mark, up until the last few days.
Mhm.
And so your writing really did help me out. So appreciate that.
Yeah, I do. Like, part of it, and one last thing, what part of his 3-3-3 plan is that he has this, ambitious plan. One of it is to increase 3 million barrels a day of oil to help contain inflation. From the other, I love what the Exxon CEO said in the last like 24, 36 hours. He's like, you ain't doing that. He's like,
Barrels per day. No.
smoking dope.
What are you guys
Are you
talking
going to pay us to do? I mean, ExxonMobil.
That's the
like,
thing
are you going to
about
pay
the
us?
energy production conversation. It's like, guys, we're already producing more than anybody
We're
out
already
in the world.
producing more than anyone,
Like,
more than we've ever. Like, we're not
3
going to lose
million
money on
barrels a
purpose.
day. No.
So, but anyways, we'll see how he does on thing. Let's do a quick fire through on some stocks in the news. AMAT, Matt, first stock in the news I have, basically because semiconductors, which have been beaten up, looking for an excuse to rally. You have a lot of beat up. Like, when you look at market charts, right? There's a lot of good charts. Semiconductors are in the bottom tier of all of those. A little boost towards the end of the week when some of the proposed Biden administration rules were not as drastic as the market realized. You saw SMH bounce off the 200. You saw NVIDIA hold the 50, right? Just highlighted AMAT could have picked up a different, many other semiconductor companies here. But if you can, I mean, one thing, the market, like AI is still alive and well, right? We're heading towards a bright future. I know it's market. One thing traders have is like cyclicals under Trump. Oh my goodness. Like, yes, guess what? The narratives that were powerful.
We'll have trends in every area of the market over time, guys. It's a cyclical moment, no doubt. But, Mark, this was an interesting story because obviously one of the negative dark clouds on the market has been semiconductors, has been semiconductor equipment companies. AMAT being a semiconductor equipment company. And that's been the case ever since ASML did their nonsensical stuff over the last 2 quarters. And so over the last 2 quarters, equipment companies have been just absolutely crushed here. Applied Materials being one of those as well. And it came out on Friday that the Biden administration, like you said, was looking to not be as aggressive on the restrictions of dealing with China, which has been the dark cloud hovering the AI conversation. But that's very important because we have to beat China in the AI conversation. That is the most important part of the entire AI conversation, is the United States being the leader in the horse race on the AI conversation. Mark, 3 years ago, when the AI conversation was in its infancy, we were about 3 years in front of China on the AI development. We are not 3 years in front of China on the AI development. We need to pick this up more because I want you to think about something, Mark. And this is so funny to me when I hear people in the market be like, "Oh, AI is just a fad gone." No, the most ridiculous thing I've ever heard. Companies and governments are spending more money than they've ever done.
AI is likely the biggest growth story in the entire life that you will lead.
It might be the biggest growth story in the history of the markets.
So, yeah.
We're 2 years into the story. It's a 10-year build out. We're 2 years into it. There's going to be hesitation. Market's going to price things too aggressively. I like this story, but I can't shut down my concern on the Chinese conversation. And so let's kind of, I kind of feel like we need to hear a little bit more on that side of it, but it was good. It's one day, but it was good to see. By the way, very quickly, I know we're running out of time. Very quickly, SMH, you mentioned that. SMH had a failed breakout for the 3rd time. 2 of them, the last 2 times, big upward moves in price. We'll see if this one can follow suit.
Yeah, I think it will. I'm betting. I'm doing a play on semiconductors this week, so I think it will. Like,
And I'm doing a play once it breaks 247
and you don't have to wait very long. I'll give
because
you
I'm
a
a precision trader.
Wednesday, Wednesday,
Wednesday. Okay.
Wednesday. Eli Lilly, next stock in the news, rose after Biden administration once again would propose. This would be really significant if it, like massively significant if it got applied, where weight loss drugs would be covered through Medicare and Medicaid. That
Zepbound, Monjero, yeah.
that's a massive. Like we'll see how it plays out.
$36 billion massive. Yeah, it's a big ticket item here. Eli Lilly, obviously in the news this week, as the Biden administration is looking to allow Medicaid, Medicare to pay for the cost of weight loss drugs. And their argument is it's prevention based on future, right? They feel it will pay for itself based on the natural health advantages of losing weight. It's an interesting argument. It's an interesting philosophy. We'll see if they can get it done. But if they do, like that's why healthcare is turned around this week. We'll see if Eli Lilly can buck this downtrend.
Yeah, absolutely. Thought it was a pretty big story. Monday, it was a light news week to start. But Amazon and their web services announced a program to start the week to help customers get ready for quantum computing. Nice little move on Amazon to start the week. Nice little freaking pattern to end the week. This is a gorgeous setup heading into the weekend, Matt.
Yeah, I'm not that familiar with Amazon and the quantum computing and aiding their customers on utilization of quantum computing. I'd like to see how successful they are at helping people understand quantum computing.
It gave me an excuse to talk about that beautiful
I figured you wanted to talk about the potential of Amazon confirming on.
Well, discretionary is a controlled sector. I mean, the XLY just controlled high base. Amazon's a huge chunk of that.
Yeah.
Controlled pattern heading into the weekend. It was on our traders report that we send out to pro members this weekend. Earnings season continues. Next couple of earnings stories. J.M. Schmucker, make some peanut butter and jelly. Why don't you reported earnings? And this is a reminder to me. I didn't find anything compelling on their earnings, but I'm not an earnings guy. You are. Is that the market did, and this was nice pullback. Is that I be on the lookout for developing plays as they occur. This thing could develop into a controlled pullback, Matt. What was your take on their earnings?
Well, they pulled off the hat trick. That was my take on their earnings. They beat EPS by slightly over 8%. That's better than the market average. They also came in year-over-year revenue, I think, was up 17%, which is decent for a non-growth company like Smucker's. And then they raised 25 fiscal guidance. And so coming from the low point, pulling off the hat trick, you're going to get some significant price movement to the top side. What you have developing right now on Smucker's is a pretty compelling secondary pattern that would be looked upon as a front run against the larger weekly reversal analysis. So I actually felt it was a pretty compelling conversation on their earnings analysis. And then on the technical side of the equation, you got that overhead right around 121, right around that 122, 123 area. You break above that 122, 123 area, you're talking about the confirmation of a very long reversal off a positive catalyst that was pretty decent on an earnings perspective. I liked it.
I knew you were juiced up about it. And then give me Dell Computer. On Wednesday, there were a couple I could put CrowdStrike in here. Some earnings report that were, basically got technology. Oh my gosh, technology having a bad day, and then it completely erased the next day, right? But what was your take on that? There was like Hewlett Packard, CrowdStrike, Dell.
Yeah, there was Dell, Hewlett Packard, and then CrowdStrike. Obviously, CrowdStrike, cybersecurity. These two, Hewlett Packard, HPQ, and Dell are very similar companies, and they both had very similar earnings reports. They both had very similar price responses. I felt I felt the market had it right. When you downgrade guidance, which both companies did, HPQ and Dell both downgraded guidance, you have to price in that guidance. But does it deserve to get punished on top of that when you downgrade fiscal quarter Q1 guidance but you maintain yearly guidance. So what you're saying is we see some problems in the immediate short term that are not going to be lasting problems for us in the long term. And so I think the market's got it right. You got to price that concern into the market. The gap down takes care of that. And then if Dell's on your watch list, you certainly do like it around the 200-day moving average, but their guidance report was a short-term problem without a long-term issue is how I would describe it.
Yeah. All right. So let's talk gold, silver, Bitcoin, wrap up our podcast. Gold started the week, with that give peace a chance, Middle East, positive news coming out on, the ceasefire in the Middle East. Gold got slammed, and then of course algos, when you have a big headline, those algos take over that day. They just take over, they control, and then it's what comes next. And then it's what comes next, which is where the real interesting conversation. No follow through on the selling. But it feels like it is in this hesitation. Okay, what are we doing now pattern? What's your take on gold as we head into the?
I don't have a big take on gold, honestly. I don't think it pays to have a strong opinion in symmetrical triangle type patterns. And even when it's on an instrument you absolutely love, if you don't love the technical side of the equation, you're not going to force the issue. Any day is a good day to end NY if you're building a position, right? If you don't have any gold in your portfolio and you want to add gold from an inflationary protection mechanism or whatever the case might be, you don't need that technical edge. But if you're looking at it from a trader's perspective, you absolutely need to see a violation of the symmetrical triangle. And when you are looking at symmetrical triangles, oftentimes the longer term trend line it usually has a little bit higher probability. In this case, it just so happens to be the resistance level here versus the support level. And so you want to see that violate the pattern and then see what happens in secondary setups next. I don't think gold's going to be a big conversation for me this week because not only do I have to see a breakout, I have to see a secondary pattern following the breakout.
I know we both like that silver support build, don't we?
Yeah, I got a different take on silver. Silver, real good kind of slowing momentum, working off a double bottom type situation near that 200-day moving average. Obviously, this is a matter of breaking out and confirming above resistance, but silver has better pattern development than either copper or gold does as of right now.
And then Bitcoin, dinged 100,000 a couple times recently, tried to pull back. You on the Traders Lounge laid out, in real time, hey, this is what we want to see, a couple different scenarios. One of them popped up, midweek, and now it's just straight breakout mechanics, isn't it?
Yeah, it is straight breakout mechanics, but I really think you want to see some consolidation here.
Yeah, I would love that.
I really think you want to see some. We're dealing with some pretty overextended conditions here in the crypto side of the equation. Some consolidation could go a very long way, but if Bitcoin's your thing, you got to be ready to pounce above 100K.
Yeah, listen, enjoyed the podcast, brother. Talk about this precision trading webinar. Give us a few highlights of what you're going to discuss. Give me 2 things you're going to discuss tomorrow night, and let's wrap it up.
I am going to teach people how to enter, put a stop loss, and target like a market assassin, and then wrap an option trade around that. And it's going to be a lot of fun, no doubt about that. We're also going to kickstart our holiday sell season as well. Like I said, this is the time. If you have any educational needs, this is the time to do that. You can go over to tackletrading.com, get an annual membership of that pro membership. I'm not even going to say get a free trial. Just make Tackle Trading, the pro membership, part of what you do in 2025. That's my strongest advice. If you make Tackle Trading pro membership part of what you do as a trader and an investor, you will make more money. You will have better risk parameters. You will have more confidence going into next year and throughout next year. And in the month of December, when you can get a 40% discount on the pro membership just by doing an annual membership, that is the strongest advice I could give. Lock that in right now. So we're not only going to be doing that precision trading webinar, we're launching and kickstarting our holiday sell season as well. So come join us. It's going to be a lot of fun on Monday. And with that said, I hope everybody has a blessed weekend and a fantastic next week. And if you need anything from us at Tackle Trading, you can hit us up at team@tackletrading.com, or you can hit us up in our Tackle Trading Discord channel as well.
Have a great week, everyone.